Hello and welcome to today's Insurance Innovation Reporter webcast, Insurance Billing in the Cloud, an Agile Path to Strategic Differentiation, broadcast by Insurance Innovation Reporter and sponsored by OneShield Software. I'm Anthony O'Donnell, Executive Editor of Insurance Innovation Reporter. And I'm delighted to be your moderator today. As always, we have great speakers on the agenda today, but I hope that you'll join in the discussion as well. This is meant to be an interactive event, and there will be a Q&A session toward the end of today's event for that purpose. We encourage you to ask questions at any time, and we'll address those to the speakers during the Q&A period. So you can submit your questions by typing them into the questions box. You can access this by clicking on the Q&A tab in the bar at the bottom of the control panel. Again, we'll do our best to address all your questions during the Q&A period, but we encourage you to type in your questions as they occur to you and participate in our discussion today. So in a moment, I'll make a brief editorial comment on today's topic, but first I'd like to introduce our speakers. Our first speaker today is Mike Fitzgerald, a senior analyst at research and advisory firm Celent. Mike's very well known in the industry, a great source for reporters like me, and his career has included leadership positions in P&C automation, operations management, and insurance product development, and his research focuses on innovation, billing, business process and operations, social media, and distribution management. Our second speaker today is Joe Garzone, who's Assistant Vice President of Finance for the PMA Insurance Group. Joe is responsible for establishing and enforcing corporate credit policy, marketing PMA's credit philosophies to client and broker executive management, and developing strategies and products designed to optimize revenue growth and minimize financial exposure. Before he joined PMA, Joe was the manager of credit and collections at Cigna. During his 7-year tenure there, he also served as senior credit analyst and manager of collections and reporting within the special risk large accounts division. Finally today, we have Liza Smith, an industry veteran and a favorite person of mine, a great source. And Liza is Senior Vice President of OneShield Software. Liza has been focused on providing insurance companies with software solutions for over 15 years. And previously, she was Vice President and Global Head of Insurance for EMC Document Sciences. And prior to that, previous roles included General Manager at ISO, the Insurance Services Office, and North American Marketing Manager and Alliance Director for insurance software provider Sherwood International. We welcome these excellent speakers. We look forward to their insights, both within their presentations and during the Q&A period, in which we hope you'll participate. And now I'd like to make a few comments about today's topic. When it comes to technology, insurers face a kind of best of times, worst of times scenario. The way businesses and consumers use technology to do business today is changing at a rapid rate, and many other technologies promise new sources of data and communications that might support exciting new insurance business models. Never has there been so much buzz, not only about greater efficiency, but even whole new ways of doing business involving emerging technologies such as smart home, telematics and the Internet of Things, robotic process automation, wearable devices, drones, artificial intelligence, and many more. However, insurers are challenged to find viable ways of integrating these technologies with their business processes, and they remain burdened by legacy systems, processes, and staff. Even as they chip away at the modernization challenge, insurers face an intensely competitive market where product is increasingly commoditized and consumer decisions are still largely driven by price. In the commercial insurance realm, a potential revolution in risk management and loss control driven by technology remains on the horizon. The bottom line is that insurers continue to grope towards a more digital future, many of them hardly having begun to achieve this kind of ease of use for customers and distributors that is routine in other industries. It doesn't help that insurers are hesitant to make transformational investments to match their vaunted transformational aspirations. They may not be attempting to do more with less today, but as Novarica research published this week revealed, insurers are trying to do more with the same. The researcher found that IT budgets across the insurance industry have remained essentially flat since 2011. That doesn't mean insurers aren't ambitious about the future, at least when it comes to talking the talk. When it comes to walking the walk, they have at least begun the digital conversation and retooled their organizations to include senior executives with titles such as Chief Customer or Digital Officer. And they've begun developing visions that include new interfaces, tools, services, and communication channels. Exactly how customers will embrace a brave new world of insurance remains to be seen. Will insurers be able to develop relationships that are characterized by much more frequent touch points? Perhaps. However, in the meantime, insurers should not overlook what is currently and likely to remain the most important touch point outside of the claim: billing. Billing is the low-hanging fruit, a logical early step in the digital customer journey. Having effective billing capabilities is, unlike many potential customer-facing features, not optional. Insurers have the opportunity to explore a range of billing capabilities that improve on traditional paper and online approaches and that are matched to their business models, systems, and budget. Today we'll discuss a range of related topics, beginning with what customers expect today. We'll turn to an example of how one insurer evaluated their situation, explored options, chose a solution, and kept its eye on future expectations and possibilities. And we'll conclude with a further exploration of billing options with some emphasis on billing in the cloud. And with that, I'd like to turn it over to Mike Fitzgerald. Welcome, Mike.
Great, Anthony. Thank you very much. A really perfect setup that goes right into the themes that I'd like to cover with everyone. And hi, everyone. Glad to be with you today. What I want to do is set up the context of billing decisions that we see going on in the marketplace around the priorities that many of the CIOs and insurers have that we've surveyed for. Every year, we survey CIOs on what's driving their investment decisions for the current year, and this is what the data showed for 2016, and it directly relates to the topic today about billing systems and how strategic those decisions can be. So here are the results for 2016. And if you look at the top two, that's what I want to use to frame our discussion today. Growth overall was the very significant, the highest significant factor in what's influencing the decisions. And second, efficiency. And here efficiency, what we get from the discussions that we have with insurers, is efficiency is not only doing more than with less, but actually doing better than you have in the past with actually less. So it's a pretty high bar. It's not just widgets through the pipe, but it's actually improving the quality of service at a lower cost. So very daunting challenges for insurers, which I'm sure many of the people on this call live a day-to-day. So the really emphasis for efficiencies on doing things better, but also looking to eliminate tasks or find ways to do existing necessary work either faster or cheaper. So the question for today, for my comments, is really how do these priorities of efficiency and growth really inform billing system selection decisions? Oftentimes, billing is not seen as a strategic system, or at least that's been the case in the past. And what we're finding in research, and again in discussions that we have with insurers, is that the attitude towards billing system is actually changing for some very significant reasons. The other introductory comment that I'd like to make is, billing functionality is very important. We've surveyed billing systems since 2001. And I would say that characterize the space functionally now as very mature. And what I mean by that is as we survey for basic billing functions and whether they're part of the base system, most of the leading billing systems that you'll look at today actually have out of the box much of the functionality around direct bill, agency bill, various pay plan ability. So the basics are there, and they're usually straight out of the box. The real battleground is whether or not these systems are agile and whether or not they can be managed efficiently and effectively. So today is not going to be about a functional requirements discussion. It's really I'm going to emphasize some of the non-functional requirements that we see going into billing system decisions. And the first of that really is centered around growth. And the reason for growth is because of customer expectations. So how does a billing system help with acquiring customers? In today's environment, I want to present to you an idea to frame this discussion that we call our iron triangle of customer expectations. We also lovingly refer to it as the Amazon effect. And this is what customers are expecting based on their actions on day-to-day on the digital platforms that we all know and many of us use. First of all, consumers have the expectation that when they deal with a company, they're going to be able to deal with it just in the time that they want, that the service that they'll be providing or the product they'll be buying won't come too late. Also, it won't come too early. So it's really being available when a customer is needed it, not necessarily we're open from 9 to 5 or you can access us by calling us, but just in time, not too late, not too early. The other expectation being shaped by the digital companies is just enough. They want just what they feel they need, whether it's what they actually need or not. They don't want to pay for more than they feel they need, and especially important in insurance, they don't want to be left wanting or they don't want to be left short. The other thing is it has to do with effort. And this is a particular challenge for insurers because we're used to asking for tons of information and a lot of effort in order to deal with us, either through the application process or subsequently. But customers are now expecting what you call optimal effort, which translates to basically no effort. This is the whole frictionless service idea. However, they will put forth effort if they can see a return for it, and particularly they will offer data if they see some type of return for it, or they'll let their personal information be used to authenticate them, for example, if they can get a faster sign-on to a website. So these are things that customers are now coming to insurers expecting based on what they've done and how they've interfaced with these other digital companies. So the question is how do you get systems in place that, especially those systems which touch the customer most often, to address these? And that's the first non-functional requirement that I would say when you're looking at a billing system. We'll see later data which will have to do with the frequency of customer touch for billing systems, but right now just say the idea that I want to leave with you is billing systems have to be evaluated not only by their functional requirements but also how they are going to meet the increasing customer expectations of a digital customer. Now let me make a really important point here, especially for those insurers that are on the line that are not direct to consumer. When I say customer, I don't necessarily mean consumer. When I say customer, that also can be an intermediated agent. And one fact that we're seeing come through the data that tends to be underappreciated or not discussed as much is the importance of tuning service systems, particularly billing, for the person in an agency who most often uses it. And what I'm talking about is typically described as a customer service representative. So question is what is the average age of a customer service representative in an agent's office? Now, many agents are lucky enough to have staffs which have long tenure, but customer service representatives can be an entry-level job, particularly if you're looking at larger agencies that have some type of call center set up, or agencies which are bringing in people to train for agents through the customer service ranks. Now, why is that important? That's important in this discussion because the age group, the highest percentage age group now, according to the Bureau of Labor Statistics information, is actually millennials. So many people talk about the impact of the end consumer and millennials, but what's not often talked about is the fact that our workplace has already transitioned to be a millennial workforce. Now, they're like 1 percentage point above baby boomers in terms of participation, but when you're looking at a billing system, especially if you're an intermediated insurer, which many of you are, please take into consideration that your customer, the CSR, actually may be one of these people who have had their whole experience shaped from a millennial point of view. And just as Anthony said in the introduction, they're looking for what's routine in other industries to also be routine in their work. The other piece that I want to talk about in terms of the ability of a billing system to respond to the new expectations, but also the new way of working, is this idea of the transition to the digital consumer. And there's an awful lot of discussion about the digital insurer and the transition to digital workflows. To make the point that many of the processes to date that we have automated are actually still paper-based. They're just done on computers. And so when you look at the ability to provide information, instead of writing it on a form, we may be typing it in online. We're seeing a transition away from this to more of a digital-enabled way of working. But primarily, customers, when they come to insurers, are seeing, well, this is not a lot different than what I was doing on paper. So in billing systems and in other especially core systems that insurers are looking for, one of the non-functional requirements is actually the ability to support a digital way of working or a digital workflow. And what does that mean? That means, does the system that you're reviewing have the ability, for example, to go out and use third-party data sources, validate that data, bring it in, pre-fill it, and use it as part of the workflow to avoid customer input? Does your system have the ability to use advanced APIs to go out and interface with other data sources of information to actually digitize the workflow? And so in looking at billing systems and other core systems, the ability to support a digital workflow is another non-functional requirement that's very important. All right, so let me now tie this into growth. And growth means either acquiring new customers or keeping the customers that you've already acquired and adding to that base. This particularly is important when you're looking at customer service. And this is a graph of over 40 insurers. When we ask them, what does your typical customer service technology look like? And the answers we got back, it's not necessarily a pretty situation. So they basically said we have limited integration, and also we have an extensive amount of information that's in shared folders. And this is particularly shared folders in Excel databases. We're moving away from this platform very, very slowly, but this does make it difficult for collaboration and for customer service. In other words, this is what I call the Alt-Tab effect, and there's an awful lot of Alt-Tabbing between different functions. So the question, again, another non-functional requirement in billing systems is, will it make it easier to serve the customer and cut down on some of the integration issues that many insurers face? The other piece that needs to be reviewed is how much a solution supports an omni-channel approach. So we have done research for end consumers dealing with their customer service preferences. And one of the myths that is out there is that young people in particular want to do all their insurance online. We wanted to get underneath the data a little bit, and so we asked that question, but we asked it in two different ways. We realized that there are simple transactions, very straightforward things like either changing information that you might have provided in the past or a simple inquiry. And we asked, what is this particular graph shows the cut between human touch and also preferences on self-service by age group. And if you'll notice there, many of the self-service and the human touch are fairly close in terms of by age group. About 50%, it's either way. They can either prefer doing it online or they prefer a human touch. Then as you go out to the right and get further out in years, then human touch really starts to be the predominant preferred service delivery. But what about complex transactions? And that's really interesting. So look at this. The human touch preference is up to 75% for people who are less than 21 years old, and pretty close to that for the age group of 21 to 30 years old. In other words, for complex insurance transactions, they actually prefer what they would define as human touch. This was fascinating to us because we always assume that you have to move online, that that's the way that people want actually to receive their service. So what does this mean in terms of selecting a new core billing system? It means that billing system has to have the ability to fit into the omni-channel platform where you're serving people if they start on the web or they start with a phone call or they start with an agent, to integrate all of that information. And it doesn't really matter what age group it is. This is something that's going to continue into the future and a capability that insurers are going to need on an ongoing basis. Now, I promised you some statistics about why it's so important for service, and particularly for billing. And billing traditionally has been thought of as a back office type of function. But when we actually ask insurers what percentage of their total service calls are billing, you'll see that the majority of them, just over 50%, say that over half of their total service calls are related to billing. So this means that actually billing is not one of those, we'll put your information on a ledger in the back office. It's actually the most frequent customer touch point. And hopefully this slide really puts all of those other slides that I talked about. That's why it's so important to be able to meet the customer where they are on that iron triangle, to be able to digitize the actual workflow, to be able to make the customer service platform be seamless all the way across the platform, and also be able to either give service online, on the phone, or face-to-face in an omni-channel way, because so many of the billing service calls, so many of the service calls that the insurer gets is actually related to billing. Now, the other thing that I wanted to share with you, the other couple of data points, has to do specifically with cloud usage. And we've seen a real movement in cloud with related to core applications. It used to be, if you look on the right, that cloud was considered, okay, we'll put a payroll system on there, or we'll put an HR system on there, we'll put email maybe in the cloud. And in fact, when we surveyed insurers, 87% said that they had at least one application of non-core in the cloud. But if you look at that stacked bar chart on the left, now when we've surveyed most recently, this was this year, just over a quarter of them actually had one line of business of core applications in the cloud. Another quarter of them are considering or planning to move core into the cloud. And this is very different than what we've seen today. So this is a picture of what your competitors might be doing, and the impact is this slide. So core cloud applications, particularly core applications, the reasons that insurers are saying they're moving are, this is really three sets. The top set has to do with financial drivers, and cost reduction and a reduced capital expenditure are extremely important to the majority of people, or very important to the majority of people who are using the cloud. So competitors who have moved to the cloud are beginning to feel these impacts and these benefits from the financial side. The second has to do with the speed to implementation. The speed implementation is extremely important to people using the cloud. And the final is easier management, particularly around the management of upgrades and staying current. So when we survey people about the cloud, if you step back from this, what you're going to see is a financial impact, but also speed and agility impacts that they're reporting are extremely important when they've either moved, the 25% that have moved to the cloud, or the other 25% which are considering it. So the bottom line on the cloud discussion is cloud is no longer for non-core. In insurance, increasingly, we see insurers consider the cloud as a real option for their core systems, including billing. So let me just wrap up and pass it over to Joe in just a minute. But I just encourage you, as you look at your billing systems and your options for going forward. Yes, billing functionality is very important, but there are also some very important non-functional requirements in billing, and I've listed some of these here in summary. So to what extent will a billing system allow you to reduce your process complexity? How will it allow you to consolidate systems or processes into and collapse them to become more efficient and also more effective? We saw the slide about reduction in cost, particularly in a cloud platform, and to what extent will this allow and support self-service options, not only for agents but also for end customers. Not only self-service, as we talked about today, but also omni-channel service. So if it's not a functional war or functional contest between systems, to what extent will one system versus another give you more speed, more agility, and more configurability? And finally, one of the things to consider is how easily can you update a system? And this is obviously part of the cloud conversation that we had as well. So the bottom line is your competitors in insurance very probably are investing in billing system upgrades, and some of them are looking very hard and are moving to actually cloud-based systems which give them additional capital and additional flexibility to respond to those two priorities I mentioned at the beginning, the growth priority as well as the efficiency priority. So enough from the researcher. That's the background. Let me pass it over to Joe, who actually has faced making some of these decisions in the past. And Joe, if you can take our audience through, what came into your consideration as you looked at the different options, I'm sure that'd be very valuable.
Thank you, Michael. I appreciate the intro, and I'm happy to be here to speak with you folks today. Again, as Michael said, I want to give you an insurance company or insurer perspective on some of these billing decisions and talk about PMA a little bit, who we are, what we do, and how our billing environment has evolved. I've been here just short of 23 years, and I've seen our company evolve in a couple of very significant ways. The first is the manner in which we do business, the types of policies we sell, and the client base with whom we deal. And the second, an evolution in the systems we employ in order to accomplish our goals, both from a company perspective and more narrowly from a billing perspective. When I started here, again, just short of 23 years ago, we were heavily involved in what I'll call fixed cost, guaranteed cost, rate-sensitive programs, pretty simplistic programs, if you will, where a client is billed a certain amount of premium, and their responsibility is just to pay that premium, and then all claims fall in our lap, and either we were profitable with some of those policies, unprofitable for the policies burdened with heavy claims, and so forth. And as time has gone by, we have migrated our book of business to larger, more complex risks that require different types of underwriting solutions where they want to participate in the loss experience, and if their programs are profitable, they want to share in that profitability, and they assume the financial risk of higher claim results if there is an unprofitable year for any way, shape, or form. So they'll invest in risk control and so forth. Under the rate-sensitive guaranteed cost environment. It was easy for us to do business with sort of canned billing solutions. It was a one-type shop fits all, and as we've migrated into these larger, more complex risks, they required more specific solutions for their billing operations, whether they be taking on different loss limits, doing business across all 50 of our states, and so we needed to employ vendor systems that provided flexibility and were not sort of out of the box. And from our perspective, the ease of doing business with us was a critical component and one of the main goals we had in looking for different billing solutions. So we needed products that were tailored to the needs of our clients. Second evolution, as I started to mention, is from a system needs perspective. So not only did we migrate our product offerings from rate sensitive to loss sensitive, from simple to complex, we also had a transition to vendor environments because our legacy-based environment didn't allow us to be flexible enough or nimble enough to provide the customers with the solutions that they needed. So many of our core transactional systems have migrated to vendor software solutions, again, because they require a modernization and flexibility that we just didn't possess in-house. So to piggyback on Mike's comments, as he said, why is billing sort of going from a back room to a front room operation? And what we found over the years was that billing represents a significant touch point. And in surveys that we have done as a company, outside of sales and marketing, perhaps, and maybe risk control, maybe the fourth highest interaction point was with our billing system and the customer service representatives that support that system. So if you do believe that all customer touch points are important in creating and maintaining an image with your clients, then you can understand why we believe having a solution that allows us to accomplish those goals is critical. Again, can't emphasize it enough, the ease of doing business is the critical component, and over the last 23 years we've found that as we've migrated our product offerings, the visibility of the billing operation has grown commensurately. Final slide for me talks about the billing platform that we currently employ. We were operating under a platform that was acquired by OneShield Billing Solutions in 2007. If you fast forward 8 years or so, that solution developed by a different vendor started to become antiquated and started to fall short in delivering the services that we needed to provide to our customers. So we conducted a thorough RFP evaluation approach for a new solution. Probably looked at 4 or 5 vendors to submit RFPs and have us evaluate those. And we made the decision to migrate to the OneShield billing platform after this RFP process. And there's a couple of reasons. It was competitively priced, and we found it was a very modernized product. It allowed us to convert our historical data with ease. And we had a relationship with OneShield since the acquisition date where the ease of doing business from their perspective and from our perspective was also very successful. And there are other reasons we decided to go that route. So in terms of the premium billings that we send through the OneShield billing environment, we had a very successful relationship with OneShield, as I mentioned. But we also sell a number of large deductible and self-insurance product offerings where PMA will pay a claim up to a certain loss limit and then bill the client for reimbursement. For better or for worse, we bill those dollars, upwards of $900 million of loss reimbursement dollars, through a separate system. So many of our clients have commented on the fact that they get different invoices from us, separate invoices from us. They get them at different times of the month, and it does create some confusion. So what we saw as a longer-term solution with the OneShield product offering was an opportunity to perhaps consolidate those invoices into one comprehensive invoice and, again, create an ease of doing business with us that we may or may not possess today. So that was one of the other major selling points. And I guess the final one was, as we talked with the OneShield representatives and got a better understanding of their system capabilities, and sort of in line with the cloud discussion that we're having today, we also believe that the OneShield solution down the road, maybe a little bit longer term goal, would be to provide our clients and broker community with the opportunity to access the system for their receivables information only. So that is something that we do not offer today. We are very interested in developing that product offering. Might be, as I say, given Michael's commentary about the IT budgets and the amount of dollars that need to be spread around a lot of different initiatives. But down the road somewhere, we believe that the OneShield billing solution will, A, as I mentioned, allow us to consolidate all our billings into one comprehensive invoice, and B, allow our clients and brokers to perhaps go into our systems and research their own information. No different than at a personal lines level, you can go into a lot of insurance company databases to view your policies, the state of your billing, and how your payments stand and so forth. So with that, I will pass it on to Liza Smith, and thank you for your time.
Thanks, Joe. So you find me today, folks, sitting in Toronto, licking my wounds a little bit as a Toronto Blue Jay fan, as the Indians did eliminate us last night. So we are here and on a somber day in Toronto, and it is gray and overcast, so it's just fitting. So I'm going to talk today about billing as a service and talk a little bit about technology as it is today. And I think that the conversation's kind of leading up to this, Anthony leading off at the best and the worst of time around technology. We're going to talk a little bit about the evolution of technology, really move into what as a service is, because that means that's a pretty broad term, and how that has to be adapted for insurers specifically, and then further really kind of get into where we think the market is moving and the opportunity that is available by embracing as-a-service technologies into your core operations. So, it is your business is changing. We really tend to look at insurers' operations into three buckets, and this is no different than any market in any financial service organization that is looking at down the road 2020 of how the consumer experience is really driving, and Mike hit the nail on the head. When we talk about consumer or customer, that could be wear many different hats within your organization, whoever it is that you leverage to service the sales part of your organization. So this is, a clear differentiation for us, and we talk about it in business and billing terms. Operations, what we're seeing and what we're hearing from customers is, we really need to increase the productivity of our billing operations. Joe just mentioned, multiple systems outputting multiple invoices, or multiple workflows outputting multiple invoices, and trying to create that efficiency and that productivity, not only of your team, but as your system runs for your business today. There's an ability to see reporting and understand how your system is working for you today. More insights, more transparencies into that is definitely something that we hear from people on what they're looking for. And then, again, leveraging automation for agents and policyholders. So what do we need to do in order to be able to extend this out to a broader range of users to enable them to operationally be more effective around billing? Technology, reducing total cost of ownership, so anything around cost reduction, the speed implementation that Mike talked about, ease of maintenance, the ability to take upgrades, so you're always staying on the cusp of how the technology is evolving, being able to more efficiently maintain and manage your technology around your billing application. Leveraging pre-built interfaces and existing content. I know this is a scary thought because every insurer does think that they do things, very, very uniquely and differently, but it's a little bit of a mind shift to kind of think about, well, what if we didn't? What if we really looked at leveraging commoditization where it makes a business advantage for us, and only looking to differentiate when we deviate for our business. So we'll talk a little bit further about that. And then from a distribution perspective, the automation for the seamless experience, we heard that through various points throughout the presentations today. So what does that experience look like, and how do you take advantage of being able to make it a much more straight-through process? And then ultimately the self-service capabilities. And self-service, as Mike was talking about, means different things to different people. So you always want to make sure that you have the benefits of being able to provide self-service and self-administering where it makes sense for your business and your consumers, and then as well as extending that as that progresses and evolves. So the challenges with technology, and this is, you know, across the wide spectrum of just any type of legacy or technology applications as they adhere to doing enterprise operation of core technology. So looking at the dominant challenges, we saw some very consistent traits. The systems, are cumbersome, they're not flexible, and nor are they built to adapt to change easily. So a lot of times what you build, what you customize, if you modify any workflows, rules, add any functionality, it's very dependent on IT, and a lot of times it's kind of once and done. Once you've done that, it's very hard to back out of that. So what we find is that creates a little bit of isolation to how your business traditionally worked to the way the market is moving and evolving. So it tends to create a gap between what the business needs are today versus what they might have been 5 years ago, and how you're able to be flexible to meet those needs. So that gap just continues to widen. So this begins the cycle and the necessity of looking at how to either further tailor your current legacy system, or look at replacing and reusing new software. So at OneShield, we took this into consideration when we were creating our platform, and a couple of things that we strive for and has allowed us to sit here today talking about a platform that has sat well within that enterprise transformation world of you know, taking out an existing system, on-premise technologies, and talking about the exact same technology and how we've adapted that to as a service, more agile, you know, and being able to service your business differently today in 2016 than it was, say, back in 2007. These are the reasons that we were able to have these conversations. With OneShield, what we did was we took we have a business process automation platform, and this allows us to really service any market because it's industry agnostic. It really is a transaction engine. It's all metadata driven. It's built on a transaction engine, and it has its own workflows and rules engine. So it really provides the ability to change, make and handle any changes through configuration and tools via a real-time design client. And it's intuitive enough that the end user is able to understand and make tactical changes, not just simple screen changes, but they could be part of the whole process in building out and maintaining their projects. So this allows a lot of cost efficiency. So you're including more people in the process. You're not lining up into an IT line for every little change that needs to be made to your system. And then you're able to have transparency on all the changes that are made within the system. So when we look at current trends, Mike alluded to this in his slides as well, based on Navarca's research on where they see that the market is going, and that some adoption has happened around core technology for AAS. Most of insurers have done things around like Salesforce, kind of sinking their teeth into how to leverage kind of an as-a-service technology. We really do see that the market is moving this way heavily. We're having more and more conversations in the sales cycle about, you know, can we do this? Does this make sense for us? And, you know, we really see that, you know, 95% of the market, you know, by 2025 will be leveraging as a service. So understanding where to start with this, how to get in on leveraging as a service in the core system, because it is a different mindset for your organization. It is really important to begin to at least have those conversations. But these are trends that we're seeing right now. One of the things that probably number one place that we have conversations is expansion into new markets. I would probably say that, you know, anybody that is using core technology as a service today has either done that as kind of a standalone business line of business, or is as a new startup or expansion into new markets. And then really, around the trends, you've heard this a lot, prevalent through everybody's presentation. It's really about extending the customer experience. So have you service, when you service, and the transparency to fulfilling all those things, customer, are part of the future trends, and definitely plays well within this as a service paradigm. So what's the value as a service? Really, it's the anytime, anywhere. Workplaces are moving to more remote access. Businesses are merging. Your workers can access systems and work together from anywhere in the world. The innovation and business agility. So at the core of it, you take the technology burden of having that, bringing a platform in-house, having the resources to maintain that. You really then becoming to focus on your business. So it's in cloud software and cloud offerings, the software becomes more important around how do you now configure this? How do you deviate? How do you have the tools to be able to do that, rather than how do I install that? How do I make sure my environment's all up and running? So you have that agility to be more focused on your business rather than the technology. Best in business practices. Really what we're going to do, or anybody's going to do, is going to put in the box a lot of that commoditized functionality. So here's things that we know how your business operates and the functionalities and features that you can leverage today. So it allows you to facilitate rapid growth and deployment from a scalability perspective as well. And then, you can have the pre-built functionality and customizable functions available to you as out of the box. So what you get from as a service is things that you get from as a service and other technologies. You get, access all of your functionalities out of the box integration. So there's pre-built integrations. This doesn't mean you can't change this or use a different provider. It's just for the efficiency and the ease of cost. Leveraging the out-of-box integrations becomes beneficial. Any of the disaster recovery and failover protections all available. Unlimited scalability, the 24/7 support, upgradability, all of that is included in as-a-service offerings. So just quickly, I have 2 more slides, and I recognize that we're getting low on time. We want to get to questions. So what we have today is our our billing solution, and this is sold still on-premise, but we do offer it in the cloud, fully hosted. PMA is an early adopter of this, so they're really helping us build out a lot of that out-of-the-box functionality that we would add to our base product. So all of the things that we need to do around what's in the box, all of the capabilities of all the different agency or direct billing, all of that features and functionality is available today. Extending that, we have web portal capabilities and a capability with the application that we see coupled along with it is what we call our partner relationship management module, which allows you to extend, and this is what Joe was talking about, allows you to extend the capabilities out to any third party and give them permissions to access the system that is very controlled and managed. And then encapsulating all of that is a full-on add-on module for reporting and analytics that supports your billing operations. So quickly looking at the billing as a service ecosystem, we still get that insurers still maintain a desire to do something different from it, what you consider your competitive differentiation. Whether or not there's an advantage to that in billing other than the customer experience, it still maintains to be seen. I mean, you have to invoice, you got to offer up payment plans, being able to do things like, different payment gateways and all of that capability is really just extending the customer experience, but is really not very uniquely and different than how everybody else strives to do business. So again, in the middle box here, the method, multi-billing methods, that's what we call in the box functionality that comes with the as a billing service offering that we have. And then what we offer on top of it is integrations. The gray boxes there are integrations that we would have pre-built to the system Now, again, we might have a general ledger system or even accelerators, because many companies use different general ledger systems, but we would have one that we would have prepackaged already, all the payment gateways that you would need to leverage, and any of the different kind of collection agencies. So really, when you look at the ecosystem, it's about allowing any type of business information source to get to the system, to be able to produce the bill, and then understanding how that bill is going to work, coming out at the back end with all of the third-party interactions that you need to accelerate kind of that best-of-breed billing experience. So with that, I know I'm running over 2 minutes, and I want to give opportunity for questions. So I think I turn it back to Anthony right now.
Well, thank you, Liza, and thanks also to Mike and Joe for their presentations. It is time now for the Q&A portion of the event. And if you haven't already asked a question, we encourage you to type one into the question box that you can find toward the bottom of the control panel. All right, so Mike, you said that billing technology was a mature area. How is that reflected today in insurers' deployed billing capabilities?
Yeah, the mature nature is in the modern systems. So it's reflected depending on where insurers are on that path. So if an insurer has upgraded to a modern system, then they probably have all the functionality related to direct and agency bill management and pay plans, et cetera. Unfortunately, if they haven't made that transition, then increasingly they're competing against companies that have a lot more functionality, a lot more agility, and a lot more speed to introduce new functions into the billing service capabilities. So it really depends on where insurers are on upgrading and modernizing their systems. But if you look at one system versus another from a package software standpoint, and Liza had mentioned this, you want to spend a lot of time looking at, okay, fine, this is out of the box, but if I want to change or I want to modify something, to what extent does this require an IT resource versus a business analyst, business expert resource to actually be able to make this change?
So I'd like to follow from that into a question about billing as a competitive differentiator. You described a scenario in which some insurance companies will have significantly better billing capabilities than others. So I'm wondering what that looks like and how billing is emerging as a competitive differentiator. And maybe as a subsidiary question, how are insurance billing capabilities comparing to that of other industries, and how much does that matter?
Well, it matters an awful lot, particularly if you're direct, because you want to take all the hassle out of the billing process, because other industries have largely done that. If you're intermediated, it also has an increasing effect because of this this messy thing that we have called agency bill, agency reconciliation, and the capabilities of insurers. And Joe mentioned this repeatedly in his presentation, to be easy to do business with. Really, a lot of that time and effort around reconciling what's due, not due by different parties on either side of that equation traditionally takes an awful lot of time. However, it's easier and easier to be able to do that, and increasing functionality in the more modern systems. So if you have an intermediated distribution force and you're not able to offer that as an ease of doing business, then you're increasingly at a competitive disadvantage.
Very good. Now, you had said earlier in your presentation that self-service, you were talking about self-service options for agents/customers, and our questioner in the audience asks whether you can explain further what activities do you deem as things that could be self-service options that are generally not available today?
Yeah, I saw that question, Anthony. It's a great question because many systems do allow basic self-service to happen, but the ones that the more advanced systems are moving into, I just mentioned one of them. It has to do with agency reconciliation. To what extent can that be done digitally or online or collaboratively rather than emailing or we should all forbid fax machines faxing statements and ledgers back and forth. So from the agency reconciliation standpoint, to what extent can a billing system allow for online agency reconciliations or at least initial trial settlement to be done within the system? Similar, but from a consumer standpoint, is there one of the advanced self-service options is actually to allow a consumer to say, okay, look, if I changed bill plans, could I extend my payment for another week, and what would the impact be? Would there be a service charge? And obviously in the background then, a modern system has to be using the equity rules to be able to determine whether or not that's available or not. I'm not saying that an awful lot of insurers are allowing that type of self-service to happen, but that's a very good example of an advanced self-service option that a modern system should be able to support and increasingly in the future will be rolling out.
I have a related question for Joe. And Joe, the question is about how much the OneShield selection was driven not just by flexibility needed for today, but for the future. It's phrased as how important was future-proofing to your selection?
Oh, it was clearly a very important factor in our decision to go that route. As I mentioned, we had a system that was serving our needs, but it was starting to become, I don't know if antiquated is the right word, but certainly we knew we needed to kind of move forward technologically speaking. So we wanted something that was going to provide an immediate benefit, a 1 to 3 intermediate term benefit, but then a long-term benefit down the road, and that's what we found with the OneShield folks and their capabilities. And again, Mike and I have sort of covered some of the same ground, which is great. But from that billing solutions questions you asked him, what we find is most successful is you have to have a breadth of capability. So when a client comes to you and says, I want to do it this way, you have to be able to say, we can do that. So if somebody wants 100% electronic interaction, you've got to be able to provide that. We have some clients that we've written for, tens of years, 30, 40, 50. I mean, we've been in business for over 100 years, and some of our clients are 35-year clients, and they're used to the paper that they get, and that's what they want. And, the accounts payable departments that stamp the paper, and that's just how they do business, and you have to be able to provide that as well. I think if you're going to be, again, to dovetail on Mike's couple of points, if you're going to be competitive, you have to be able to have the flexibility to provide what these existing clients and potential clients want you to provide. So that was a critical decision. I mentioned the potential consolidation in the mid to near term of different types of financial transactions that we need to bill, and then the long-term potential to provide access to our system through whatever IT mechanism proves to be the most effective.
Very good. Liza, I'm going to skip the question about who you think is going to win the World Series, but we do have another question. How much control do I have over my application if it's provided as a service?
So I think with there's a little bit of a misnomer that when you do something as a service, you give up all permissions to doing anything. And with modern technologies nowadays, the ability to have enable the users and to access and maintain their whole application in the cloud can be as much or as little as they want to. If it's a full managed service or software as a service capabilities, you might have that completely outsourced, and any change that you need can be done by the vendor of choice. But really within the application itself, within especially the OneShield application, you have all the tools. You have access to the design tool and the maintainability of that, and you manage and maintain your whole entire application as it runs, as it services your business today. It's just the difference that is the technology or the infrastructure itself is available in the cloud.
Very good. We'll just try to take one more question. We're kind of at the end of our time now. You know, I think you might be able to take this, Liza. It could certainly be thrown to our other speakers. How are insurance companies handling fees for quarterly/monthly payments? Are they endorsing it in the policy system? And does that surcharge need to be shown on a deck page for charges? No, that's not a technology question, more of a technology process question.
Yeah, you know, I would actually probably see if Joe or Mike want to take that, and then I can definitely do it on the back end on how we've seen it handled. But I think it might be more interesting coming from, you know, Joe, if Joe or Mike wants to handle that. It's a good question.
Do we have a volunteer?
Could you repeat it, please?
Yeah, sure. How are insurance companies handling fees for quarterly/monthly payments? Are they endorsing in the policy system? Does that surcharge need to be shown on the deck page for charges?
I'll answer the first part of it. We currently don't charge for installments, so I'm not sure. You know, that's our answer to that particular piece of the question. I don't believe. I think the deck pages would only show, you know, premium oriented. Again, not in rate making. I'm not in the legal department, but I believe the deck pages are more premium oriented components of a billing, and those fees would be outside of any four corners of the policy, as our attorneys like to describe it.
Yeah, I think that might be a question we could answer. Go ahead, Mike.
Yeah, this is Mike. So as far as the deck page goes, generally it's not, but it's also how that's treated is heavily state driven, as well as Joe said, companies sometimes make the decision for competitive reasons to either charge or not charge that fee. So it really does vary by company and also by state. A lot of companies do charge an installment fee, but you're not going to find a general rule that companies are following.
Very good. Thanks for that, Mike. Well, we've come to the end of our time. I'd like to thank everybody for coming today. You will receive a recording link for today's webcast during the next few days, and you'll be able to access it on demand during the coming year. So by all means, access this later and tap into the insights that were delivered by our speakers today. Thank you for attending today's webcast, Insurance Billing in the Cloud and the Agile Path to Strategic Differentiation, broadcast by Insurance Innovation Reporter and sponsored by OneShield Software. This event is copyright 2016 by Pembury Strategic Services, LLC. The presentations are the intellectual property of the presenters, who are solely responsible for their content and their opinions. On behalf of our speakers, Mike Fitzgerald, Joe Garzone, and Liza Smith, we'd like to thank all of our attendees for their time today. This is Anthony O'Donnell of Insurance Innovation Reporter, wishing you a great day.